So final account preparation for the level 3 practice assessment 2. You will have a 6 question in the exam. So we have to answer 6 question, and 6 question are mandatory. And there is no optional. We have to answer all the 6 question in the exam, number 1. The next thing is like we'll have it 2 hours. So we have to complete our exam within 2 hours. And we exactly will know what question we're going to see in the exam. So you can make yourself ready for the exam. And I would say like it is possible to finish the exam 1.5 hours easily if you can really really well prepared for the exam. So let's try to understand what we're going to see in the exam. The first question is always from our incomplete records. So 6 tasks we're going to see in the exam, 6 tasks. Question number 1 that we're going to see from incomplete records. Incomplete records. Now in this incomplete record question, we're going to see either sales ledger control or purchase ledger control or bank and VAT. This is the normal practice question come in the exam. Then question number 2, that will be again from the incomplete records. So incomplete records. And this question mainly will come from sort of like workings, for example, markup and margin. And also some question will be from the ethics. Question number 3 that we're going to see the sole trader financial statement. Sole trader SOFP. Sole trader financial statement. Now, sole trader financial statement is a very common in the exam, and it will be definitely on question number 3. But sometimes it is possible the question can ask for the profit and loss account as well. Let's move to the question number 4. Question number 4 will be mainly the theory question. Theory question. And here you're going to see some question from the limited company and also from the IS. And question number 5, this question will be from our partnership. So question number 5 will be partnership. And here we have to do the appropriation account. We have to do the current account. We have to know how to do the goodwill account. And finally, question number 6, it will be from the partnership again. But this time we have to make either profit and loss account or SOFP. That's it. So this 6 question you're going to see in the exam, and obviously we already know what question will be in the exam. And based on that, we can practice, we can make ourselves ready. So let's start with our practice assessment 2. Let's have a look how many questions we have and how can we answer all of this. So the first question, as I said, it will be from the incomplete records. And the question will give you a lot of information. You have to pick the right one. Sometimes some information will be not relevant to your answer, so you have to know how to ignore it. So some information they'll give it to you just to make you confused, but if it is not relevant to your answer, you have to ignore it. All right, let's have a look. The first question for 15 marks. This task is about reconstructing general ledger accounts. You are working on the accounting records of a sole trader for the year ended 31st of March 2017. The business is not registered for the VAT. If the business is not registered for the VAT, we don't have to worry about the VAT, and the VAT is also the cost for the business. You have the following information. So you have some information from the bank. Receipt and payment record in the bank account. So amount owing from credit customer. So amount from credit customer. So how much we received. So this is the amount we received from our customer. Then amount to credit supplier. So how much we paid to our supplier is here. Capital injection. So during the year, how much capital I inject in the business. Office expenses, how much you paid for the office expenses. Proceed from the sale of non-current assets. So how much we get by selling the non-current asset. And bank charges, how much is expense for the bank charges. On the other hand, we have some opening balance. So we can see we have a trade receivables. 31st March 2016, that's my opening balance. And 31st March 2017, that's my again the opening balance for the next year. So whatever is the closing here for the 31st of March 2016 is opening for this year. Whatever is closing for 17 is opening for 18. So let's try to understand one thing that is a little bit tricky. Trade receivables, we have opening balance, that's the closing balance. Trade payable, opening balance, closing balance. Closing inventory, we have a year ending for 16 and 17. Now the bank on 31st of March 16, we have a closing balance that is credit. Remember that bank credit means is an overdraft. Bank closing means is an overdraft. And on the year end 31st of March 17, we have a debit balance. This doesn't mean overdraft. This means it is our money. Say own money. So we can say own money. It's the business money. So when you see it's the bank is a credit, we have to understand it is an overdraft. And when it says a debit, that means it is our money. Our money means the business money. Have to be really careful with that. So when you make the T account, so the opening balance for the bank, it will come here on the credit side because it's overdraft. So balance BD will come here, 3283 as overdraft. Opening balance will be on the credit side. It's not our money, but the closing balance at the end is become debit. So first it is start with the overdraft, but end up with the debit balance. So it will be the closing balance. And the closing balance sheet will be again here, that is 1568. Because whatever is the closing is the opening for the next period. So if the closing is 1568, that means the opening for the next year will be 1568. So that will be the balance BD. Remember that. Whatever is the closing balance, if it is debit, that means the next year it will be opening balance as a debit. So don't be confused why my BD and CD both are on the same side. The reason both are on the same side, the opening balance, you have a credit balance for this year, 31st of March 17, and the opening balance credit means it's a liability, so it will become on the credit side. But at the end of the year, you have a debit balance, that's the balance CD. Closing balance means balance CD, and it's your money, whatever is the balance CD will be the balance BD for the next period. So make sure you remember that. Then we have all sales of good are on credit. Okay. Contra entry 38018 was made between the sales and the purchase ledger. All right. So now the contra entry means like when the customer is also your supplier. So for example, I am the seller and my supplier also sells something to me. For example, if I make a juice and if I buy orange from the supplier, so I am buying the orange from the supplier, and let's say at the end, I'm selling this juice to the supplier as well. So he's also my customer. So he's my supplier, also he's my customer. So when this has happened, sometimes rather than you paying the whole amount, you said just offset the balance. For example, let's say we have a customer, there's the customer, and there's the supplier. Now let's say the supplier need to give 500 pounds because he buys something from the seller, not the customer, let's the seller and the supplier. And the seller need to pay something 1,000 to the supplier because he buys something from the supplier. So rather than giving 1,000 and take 500 back, so they might say, why not just you give me 500? So I'll give you 1,000 and after that you'll give me 500 back. So it's better you just give me 500. It's the same thing. So I don't have to pay anything to you. Now this is called contra. Now when this has happened, of course, they both will be agree for that, but the sales ledger control and the purchase ledger control will not be agree because the sales ledger control will say like, I didn't receive the whole amount from the customer. And the purchase ledger control will say, oh, I didn't receive the whole amount from this supplier. So for that reason, for that, I didn't pay the whole amount to the supplier. So for that reason, we call it contra ante. Contra ante, to offset the balance from each other. So on the sales ledger control, we write on the credit side as a purchase ledger control. We say it is offset with the purchase ledger control. On the purchase ledger control, we write on the debit side as a sales ledger control. So they cross each other, the balance. We're going to see how it work anyway. Then we have the proprietor draw 1650 per month from the business bank account for the personal use. Remember, if the owner take any money from the business for personal use, we call it drawings. Call it drawings. And drawings will reduce the capital. Remember that drawings will reduce the bank. If the proprietor take this money per month from the business bank, that means the business bank will go down by this amount. So 1650 per month, we have to multiply by 12 to find it out how much for the whole year. And the bank will go down by this amount. And this will be our drawings. The proprietor transfer her own office equipment value 1400 to the business during the year. Remember that if the proprietor or the owner give anything to the business that is basically personal asset, that will be treated as a capital. So the way the owner give any money to the business, we call it capital. But if the owner bring anything like an asset, like a car, computer, table, and the value will be treated as a capital. So 1400, the capital will be increased. Non-current assets sold in the year was the motor vehicle. So there is a non-current asset sold, motor vehicle. We need to see how much you sold it for. So maybe you can see here, proceed from the sale of non-current asset. This money come to the bank. Okay, this is the story of our question. That's the information we have. Now let's look at the requirement. The first requirement is asking, find the total sales by preparing the sales ledger controls. They're asking to find the sales. So we need to make the T account to find the sales. How much is the sales? The next one asking, find the cash purchase by preparing the bank account. So from the bank account, I'm going to find the cash purchase. So very important to read the requirement so that you understand what exactly we are looking for from this question. So from the first one, A, we are looking for the sales. From the B, we're looking for the cash purchase. All right, so you're going to prepare 2T account on the corner. So let's make 2T account. The first one we make sales ledger control. Sales ledger control. And the next one, we're going to make bank. Okay. Let's try to do this one. We start with the opening balance. Always start with the opening balance. So sales ledger control, the name of the trade receivables is sales ledger control. So sales ledger control or the trade receivables is the same thing. So 2016 is the opening balance, 17 is the closing balance. So let's have a look. How much is the opening balance we have? 8924. Opening balance we call balance BD. That is 8924. That's my opening balance. And I have a closing balance 9027. That's the balance CD. So we said balance CD 9027. So this is done. The next thing we're going to see how much we received from the credit customer. So we have amount from the credit customer. This is the money we received from the credit customer. We called it bank. On our bank, we received this amount 79,805 from our credit customer. And amount to credit supplier capitalizations. This is not linked with the sales ledger control. Then we have a contra entry. This one we have to take contra entry. So we're going to write opposite. On the sales ledger control, we'll write purchase ledger control. On the purchase ledger control, we're going to write sales ledger control. So we're going to write PLCA, and that is 318. And that's it. All these things link with the sales ledger control. Now we need to look at the higher side. Which side looks higher? The credit side looks higher. We need to add these three to find the total. We're going to write the total on both sides. And after that, you're going to find how much is the sales by subtracting the opening balance. So adding the credit side minus the debit side will tell us how much was the actual credit sale. Looking for the sales, and this is our balancing figure. Beyond the bracket means balancing figure. So if we add 79805 plus 318 plus 9027, that will give us 89,150. Going to write the same thing, 89,150. After that, we're going to minus the opening balance 8924. So 89,150 minus 8924. That will give us the sale that is 80,226. This is the one we're looking for from the first one. It's quite simple. All you have to remember the template. Number B, they're asking for the bank. And from the bank, they're asking find the cash purchase. Let's start with this one. Bank will be tricky, the opening balance, because opening balance, the bank we have on the credit side. So you're going to write balance BD, that is 3283. The balance BD, and also the balance CD will be on the credit side. Balance CD, because this is debit. Because whatever is the balance CD is the balance BD for the next period. Remember that. For that reason, it will come on the credit side, because balance CD on the credit means balance BD on the debit side. All right, so this is our opening and closing is done. Now we're going to see how much we receive and how much we paid. If we receive, it's on the debit side. If we paid, it's on the credit side. Let's look at the first one. So the first one we receive from amount from the credit customers. So we said sales ledger control. From the credit customer, we receive 79,805. Number one. Amount to the credit supplier, this only paid, because from the customer we received, but to the supplier we paid. So we said PLC, so purchase ledger control. We paid 39,090. Then we have capital injection. If we have a capital injection, that means money came to the bank. So money received on the bank debit. So we said capital, that is 4,000. Then we have office expense. So it's also credit because office expense we pay. Office expense, that is 22,076. Then proceed from the sale of non-current assets. So we got some money by selling the non-current asset. So we said disposal of NCA. How much we get? 2950. And after we have bank charges, is expense for us. Bank charges 178. And what else we have? Then we have some contra will not come in the bank. Then proprietor withdraw 1650 per month. So you need to know how much per year. 1650 times by 12. That will give us for the whole year, and we call it drawings. So 19,800. We call it drawings. 19,800. And what else we have? So this one 1,400 will go to the capital. This one have no link with the bank. Then is there anything else? So we have an opening balance, we have a PLC, we have a office expense, and we have a bank charges, we have a drawings, we have a balance sheet. I think that's all. After that, we have to look for which side is higher. So it's look like the balance P, like opening balance on the debit side is like sales ledger account 79. So it's look like debit side is higher. So you're going to add the debit side. And we need to see how much it is. So if we added all of this, that will give us 86,755. And same here, 86,755. Then you minus all the credit to find how much is the cash purchase. Normally, you need to write the cash purchase here over the balance sheet because balance sheet is the last one. Cash purchase is the balancing figure. So if you minus all of this, that will give you the cash purchase 760. That's it. So on the bank, all you have to know, if you receive the money is on the debit, if you paid the money, that is your credit. So this is a two question. It's a very likely you're going to see the same thing in the exam. And they have to be careful what they're asking to find, because you need to write this one on this empty box. All right, so any question from anyone before we move to our question number 2? If you have any question from the question number 1, you can write it down now. And otherwise, you can move to the next one. All right, let's move to the next one then. So the next one will have task number 2. And this task again will be from the incomplete records, as I said, but it will be most likely from the markup and margin and a little bit short question. So mixture of the short question. Okay, let's have a look. The first one, this task is about incomplete records and explain 760 again. You need to make sure you ask when I'm asking the question, please, because we cannot go back. When you ask me, you have to ask me when I ask you if I have a question. So the first thing you have to do, you have to add to the debit side. So all the debit side you need to add. And you minus all the credit side. And the difference will be 760. And that's it. It's quite simple. All right, so let's have a look at this one. The first one we have here is to show whether the following statement is a true or false. Incomplete records is a term that may be used when part of the accounting system of an organization is absent. That's true, because we only do the incomplete records when the owner of the business said, or the bookkeeper said, we have something missing. For example, let's say the owner said like, sorry, I don't have any sales daybook, so I don't know how much is the sales. Or maybe they said like, sorry, I don't have any purchase book, so I don't know like how much is my purchase. So for that reason, you have to use the techniques to find it out. how much is the actual sales or how much is the actual purchase. So for that reason, we have used this incomplete records, because this technique will help us to find the missing figure. So sometimes even for the investigation purpose, if HMRC come and if HMRC try to find something, and if the paper or working paper is missing, they use this technique to find out the balance. So they use the incomplete records technique to find it out how much was the actual sales. So they'll tell you like, oh, how much you received from the customer, how much was the opening balance, and how much was the closing balance. By using this technique, they end up with how much was the sales. So for that reason, it is absolutely true. Let's have a look at the next one. You are a trainee accounting technician working on the final account for a sole trader client. The client is registered for the VAT. Remember that if the client is registered for the VAT, VAT is not the cost for the business. The total cost of goods sold for the year ended 31st of March 17 was 120,960. So that's my cost of goods sold. That's my cost of goods sold for the year ended 31st of March 2017. Inventory decreased by 500 during the year. Inventory decreased by 500 during the year. Calculate the value of the purchase net of the VAT for the year ended 31st of March 2017. So they are telling like, if the inventory is reduced by 550, how much is the purchase? Now it's like quite simple, because if the inventory is decreased by 550, that means I purchase less. So if my inventory is more, that means I buy more. For example, if I said I have a 10 pen, and if I said I buy 2 extra, so it will be 12 pen. So if I buy more, then inventory stock will be more. And if the inventory is reduced, that means the purchase is less. So all you have to do, you have to say 120,960, and the inventory decreased by 550, so minus 550, and that will give us 120,410. So this is my purchase. 120,410. Let's have a look at the next one. The next one is says the trader has limited storage space, so aim to keep inventory equivalent to approximately 1 month average trading. 1 month average trading. Now complete the sentence by picking the most appropriate option from the drop-down list. How to make an initial estimate. Remember, it's just estimate. It's not going to be 100% correct figure. It's just the estimate. So for the whole year, if the purchase is 120,410, so how much will be per month? So divide by 12. So it will be roughly 10,000 something, 10,000 plus. Because for the whole year, it is 120,000. And if we divide by 12, so per month will be 10,000, little bit. So our estimate will be approximately 10,000 per month. So we said approximately will be 10,000 per month, because for the whole year it is 120,410. So divide by 12 will give us roughly 10,000, because it's an estimate. Remember that. All right, let's have a look. The next one. The next one we have here, that's for the markup and margin. The business sell its goods at markup on cost of 35%. So basically the markup is 35%. Okay, so how did you get 10K? It's quite simple. It's very simple. So you have a purchase. So let's have a look. How much is your purchase? So let's have a look. Okay. So you see your purchase is 120,410 for the whole year. So if you divide by 12, it will give you per month, that is 10,000 plus. That's what I said. So if it is 120,000 for the whole year, so how much should be per month? 10,000 plus. This is the estimate. Okay, so let's have a look. The next one. The next one we have here, that is the business sell good at markup 35%. So markup, we always understand. Markup is always on the cost and the margin always on the sales. Calculate the sales figure to go to the trial balance. How much will be the sales? Okay, so I need to know how can we calculate that. Remember that if there is a markup and if there is a sales, is contradictory because it will not go to each other. Markup is linked with the cost and the margin is a link with the sale. So let's have a look. How much is the sales will be? We need to add a profit on there. So let's have a look. How much was our cost of sales? So if you go to the top, we can see our cost of goods sold was 120,960. So cost of goods sold was 120,960. So this is 100%. And we have to make now 135% because 35% is the profit. So all you have to do, you have to make it 135,000. So 129.60. You can do divide by 100 and times by 135, or you can just multiply. So 129.60 times 1.35, it will give you the same figure. That is 163,296. So you have to increase by 35%. So the cost of sale plus 35% is the profit. Is the 162,296. So as I said, 120,960 times by 1.35. Because you have to increase by 1.35. Or you can divide by 100 times by 135, which will give you the same figure. All right, let's move on. So the next one we have here. The next one is asking, standard rated VAT is 20% applied to all sales. The trader sell an item to a customer 405 including VAT. Remember that if the question said the VAT is included, we have to take out the VAT. VAT include, that is a very easy way to find it out how much is the VAT, just divide by 6. If the question say including VAT, you have to divide by 6 because the VAT is only included, that is 100 plus 20%, this is 120%. So 120% means if you divide by 6, then it will be 20%. For that reason, you don't have to know all of this. You just know if the question said the VAT is including, you have to divide by 6 to find it out how much is the VAT. So it's say 405 divided by 6. And that will tell you how much is the VAT. So let's try that. 405 divided 6, and that will give us the VAT 67.5. That's my VAT. So if I take out the VAT 405 minus 67.5, so my net will be how much? Minus 405. Net is 337.5. That's my net. Now I have to know, the question said how much is the cost, original cost. So this is the sell price, that is 337.5 without VAT. Now I need to know how much is the cost. So we can see here the markup is 35%. So if the profit is 35%, we need to know how much is the cost. So we need to find it out. So divide by 135 and times by 100. And that will bring us the cost. Because 135 means 100 is the cost plus 35 is the profit. And that's why 135%. So you have to go back to 100%. So divide by 135 times by 100 will go back to 100 the cost. So let's do that. Divide by the 135 times per 100. It will give you 250. So the original cost is 250. All right, let's move to the next one then. The next one we have here is at another sole trader client, you are asked to find some missing figure for their final accounts, okay? Select the one statement that will always apply to such work. Situation involve incomplete record always suggests that your client does not act integrity, okay? Then any association with missing figure means that you will not maintain your integrity. If you become connected with misleading information, you must deassociate yourself from it. That's the true one. So if you find you are becoming or somehow you are getting connected to the misleading information, you mean the wrong information, you must disassociate yourself from it. So you need to come back from there immediately. All right, let's go to the next one. The next one we have here, while reconstructing the bank account, a total of 2,000 was identified, which you believe to be cash sales. The proprietor tells you by email that it is an injection of the capital. So when you put the capital, obviously it will increase the capital of the owner. So it is the benefit for the owner. But you identify it is a cash sale. And rather than showing an income, the owner wants to increase the capital. So he makes some cash sale and 2,000 he deposit to the bank by saying it is the capital, it is not the sale. So what will do that? What will be your action? How do you treat the explanation? Accept it, you cannot accept it. Ignore it, no, you cannot ignore that. Reject it, and you need to contact HMRC. No, you never contact HMRC. Remember it, examine the bank record against the new information. So remember that and check it with the bank with the new information. So you can do that. But other thing, you cannot do anything else. You cannot tell the HMRC. All right, let's move to the next one. Question number 3, we're going to see from the sole trader. It will be definitely in the exam. And either it might ask you the profit and loss account or the statement of financial position. It can ask you both. So not two at the same time, but they can give you either profit and loss, or they can give you the statement of financial position. This task is about final account for the sole trader. The trial balance for the sole trader known as Oxing Trading is below. All the necessary year-end adjustments have been made. The following are accounting policy used by Onyx. Sales revenue should include sales return, if any. Purchase should include purchase return carries inward, if any. Okay, so let's have a look. So if there is any sales, and if there is sales return, we have to take it out from the sales because sales return is not our actual sale. On the other hand, if there is a purchase return, this is not our actual purchase. So calculate the sales revenue figure to be included in the profit and loss account, and calculate the purchase figure to be included on the statement of profit and loss. Okay, let's have a look how much is the sales we have, and we need to minus the sales return. So we can see here we have a sales 158,589, and we have a sales return 2602. So you have to minus it. So 158,589 minus 2602, and that will tell us how much is the net sale. Then for the purchase, the same thing. So you have to find the purchase, have to minus the purchase return, and that will tell us how much is the actual purchase. So let's do that. So we have this one 158,589 minus 2602. So our net sales will be 155,589 987. That's the sales, and the purchase will be, we have a purchase 105 457 minus 845. That will give us 1046 12. Okay, let's go and to complete the first question, sales and the purchase. So the first one we have here, that is 155,987, and the next one for the purchase that we have here 104,612. Okay, now we're going to prepare the profit and loss account. In the profit and loss account, we have to look for either it is income or it is expense. Very simple is this. So we have two things. One is profit and loss, and one we have a financial statement. On the profit and loss account, we only take either it is income or expense. On the financial statement, we take either it is an asset or liability or capital. So when you do the profit and loss account, the question said prepare the profit and loss account. So we need to look for only it is expense or income. That's it. Okay, so let's start with the sales revenue that we have just done. So we said 155,987. So this is the one we have just calculated. Then once we have the sales revenue, the next thing we'll do is find the cost of sales. So we have a formula for the cost of sales, that is opening inventory plus purchase less closing inventory. So you need to always remember this formula. So let's have a look how much is the opening inventory we have. So we have opening inventory, that is 13,313. And we have a purchase. The purchase we have done the workings, so that is 104,612. Then the closing inventory, we have a closing inventory. So that's our closing inventory, 12,608. Remember that if it is something negative, you have to put the minus sign, because minus closing inventory, opening inventory plus purchase minus closing inventory. If it is plus, you don't have to do anything. But if it's minus, you have to show the minus. Remember that. You can use the bracket sign. There is no problem for that. And that will give us cost of sales. So cost of goods sold, and that will be 105,317. And we minus the cost of goods sold from the sales to find how much is the gross profit. So let's do that. 155,987 minus 105,317. So our gross profit is 50670. Now we have to add. Now here, sometimes, most of the time in the exam, you're going to see disposal of non-current asset, but you need to see what else you can add. If we have a disposal of non-current asset, we'll take. So there is no disposal of the non-current asset here. Then you need to look, is there any recycle rebates? We need to look at any recycle rebates, and we can see we have a recycle rebate. Remember that a recycle rebate means the government give you some grant. So when you have a business, and if the business is eligible for the grant, then the government will give you some money and they will never take it back. So they will give like a gift. For that reason, it is your income. You have to show this one as income. You never give this one back. It's just you receive from the government. So you're going to see recycling rebate, and that is 598. After that, we have to minus all the expenses. So we have to minus our depreciation. First thing we minus, that is depreciation. So let's have a look if we have any depreciation in the question. Yes, we have depreciation. So that is, depreciation is 3603. Then we have, what else we have? We have general expense. This is also expense. So general expense, that is 29,970 and 575. 575. Then we have a payroll cost. This is and that is 21,483. And that's it. Remember, if the box is empty, remember that if the box is empty, you really don't have to worry why it is empty, because they can give you extra box to make you confused. Why the close inventory is 12,608? Did I write something wrong? It is 12,608, isn't it? 12,608. The question tells us close inventory 12,608. That's why it is 12,608. I'm not doing anything with the close inventory. The question gave it to us, this figure. All right, so then the next thing we have here, that is to find the total expense. If we added all of this, is 4 to find the total expense. And the total expense is 55,631. And now I have to find this profit or loss. So we have a gross profit that is 50670. We added 598. New minus 55. Remember, any loss you have to show in a minus. The way we show closing inventory minus, any loss you have to show in a minus. It is possible the business can make a loss, so don't be confused too much. Like in the exam, if you find you're making a loss, but it is very rare in the exam you will find the loss question. 95% time you'll find the question you make a profit, you're not making a loss. But it is possible you can find as well. All right, so if we do that, we have a loss that is minus 4363. So we have gross profit plus the rebate minus the total expense, and that will give you a loss for the year. That is 4363. All right, any question from this one? So far we have done for the profit and loss account for the sole trader. Okay, so let's move to the next one. The next one is says for the capital account. It's quite simple. They said you have the following information about a different sole trader for the year ended 31st of December 2017. A profit 6409 was recorded. The proprietor did not take any drawings. A permanent capital injection 5,000 was made to clear the business overdraft. Okay. Remember that the profit is a part of our capital. If we make a profit, the capital will go up. If we make a loss, the capital will go down. And if we take a drawings, if we withdraw any money from the business for personal reason, the capital will go down. That's the reason we said opening capital plus profit, less losses, less drawing, and that will give us the closing capital. So we already have opening balance here, opening capital, and we have some profit. So profit will always increase the capital. Remember that. So profit, that is 6409. And then we have a drawings. It's not a drawings. There is no drawing. They said not take any drawings. Okay. Then you have a permanent capital injection. So they put some more capital. So we said the bank. If the owner provide any capital, bank is debit, capital is credit. That's the journal. So we added 5,000. After that, we added all of this, and that will give us 29,909. 29,909, and that will be our balance sheet. 29,909. That's it. So it's like a T account, how we used to do on our level 2 for the capital is the same thing. It's nothing new here. All right, so any question from this one? Okay, then let's move to the next one. Let's move to question number 4. The question number 4 again, it will be a mixture of the little question, and that will be kind of the ethics and the limited company question. So this question will be really fast to do if you know the answer. So you can do this question really quick, and you can get like the full 16 marks from this question if you understand it. Okay, let's read this one. This task is about the knowledge and understanding and underpinning final account preparation. Answer the following question below regarding the different type of organization. With reference to the company, which one of the following best describe a limited company? Remember that limited company, the word is limited. That means the owner of the company, their liability is limited. For that reason, we call it limited company. The owner of the limited company, their liability is limited. So if the business is collapsed or if the business is shut down, if the business is dissolved, in this case, the shareholder or the owner of the business, they will not lose any money beyond their investment. So how much they invested, they will maximum lose that money. So they're not going to lose more than that. So for that reason, so we have a greater advantage to open a limited company. First one, it says, if a company goes into liquidation, liquidation means if the company is closed, if the company ceases the trading, if the company shut down for any reason. So if the company goes into liquidation, each shareholder loses no more than the amount the original investment. This is the biggest investment the limited company have. So if the company go for the liquidation for any reason, if they cannot run anymore, the owner or the shareholder, they will not lose any money beyond the investment. This is the main advantage about the limited company. Then we have, which one of the following is the benefit of running a business as an ordinary partnership rather than sole trader? So what is the advantage to running as an ordinary partnership rather than a sole trader? Limited liability, that's not true because they don't get the limited liability. If they try to get the limited liability, it has to be a limited liability partnership. It cannot be ordinary partnership. Partnership legislation generates less admin work than sole trader. This is not the like greater benefit. It's not true because sole trader have a less work than partnership. There is a chance of greater funding from the ownership of the business. That's true. Because if there is only one person, it is true. If there is only one person, it is true that uh, the capital may be a little bit less. But if there's a partnership business, it is possible there is a lot of people involved and they will introduce more capital in the business. So there will not be shortage of the capital. This is one of the benefit of the partnership business. There'll be a lot of partners involved and the amount of the capital will be more than the sole trader. All right, it's not a difficult question. Let's move to the next one. Next one from the accounting equation. Let's have a look at this one. So the accounting equation is asset equal liability plus capital or equity. That's true. Remember that. Asset equity or the capital is the same thing. So asset equal capital plus liability or equity plus liability, both are true. And then we have a sole trader investment in the business is known as share capital. That's false. If a limited company if a shareholder invests any money in the limited company, we call it share capital. But the sole trader, we don't say it is a share capital. Equity interest in a limited company is split between the owner investment and the amount arising from the profit or other event. That's true. So in our limited company, we have two parts. The first one we call it equity. Equity is mainly the owner investment. So whatever is only belongs to the owner, we call it equity. Now, for example, when we start a business, if we do a business, we need capital. Capital means we need investment or money. In this capital, it is possible like equity, and also it is possible there's a part of debt. That means, for example, for the business, if your capital is 10,000, it is possible 5,000 from the owner's own money. So the owners have some savings, for example, or the owners have some asset. So he sell it and he have 5,000. So this is the equity. On the other hand, 5,000 is the debt. Debt means like he borrowed this money from the bank, from the friends, from the family, from anywhere. So for that reason, the capital can be divided into two parts. So equity represents only the owner interest, owner part. Only the owner part we call it equity. All right, let's read the next one. The next one we have here. Answer the following regarding the need for and preparation of the final account. The framework within which accountants work identifies two underlying assumptions governing the financial statements. Okay, drag and drop the correct. So the underlying assumptions are what basis? Remember, that is always accrual basis. Always accrual basis. We prepare our financial statement and account based on the accrual basis. Now, what is the accrual concept? Accrual concept is also called a matching concept, and that means all the relevant transaction for that particular year, you have to record it regardless you paid for that transaction or you receive for that transaction. So for example, if there is electricity bills for the month of December, and this is my year end December, I have to record it on this year, regardless I paid for that or not. Maybe I paid next year, but I have to record it this year. This is the accrual concept. So all the accounts we prepare, the financial statement based on the accrual concept. And the going concern, remember that. The next one is going concern basis. So going concern basis. What is going concern basis? Going concern is all about to assume the business will continue for foreseeable future. Foreseeable future means like when you open a limited company or a business, we open the business with the intention we'll never close it down, we'll never shut it down. So we will carry on this business like forever. There is no time limit. For that reason, the owner of the business die, but the business never die. This is the concept, is called going concern. So we open or we start the trading or we start the business with the intention or assumption that the business will continue foreseeable future. You mean like forever, it will never die. All right, let's move to the next one. Okay, the next one we have here. The framework also recognizes that a variety of different groups have a need for financial statement. A sole trader may require information from a set of limited company accounts to what? Now, why they need assess the ability of an organization to settle the short-term debt, extract financial information for the tax return, obtain a list of the company customer. So a sole trader don't have the tax return anyway, so they don't do this thing. A sole trader may require information from a set of limited company accounts to access the ability of organization to settle the short-term debt. This is a more suitable one. So if you want to see, I'm a sole trader and I'm looking at financial statement or information on the limited company accounts, what I want to see. Maybe I want to see like the ability to settle the short-term debt. That means like if they buy something from me, they have enough cash to pay me for this transaction. So we're looking for that. You are an accounting technician working in public practice on the final account of a limited companies. Why it is important for you to keep up to date with the technical accounting knowledge. So why it is important to keep yourself up to date with the technical accounting knowledge. So why you have to keep yourself up to date? That's very important to keep yourself up to date because, for example, let's say you become accountant, it is not the end because every year, for example, let's say every year April, the government changed the minimum wages, they changed the tax rate, the national insurance contribution, the employer allowance, they change everything every year April. Now once you are qualified doesn't mean you're not going to study anymore. You don't have to know anything because you already know everything. Whatever you already know, that is relevant for that year. So every year you have to keep yourself up to date because the information is keep changing every year. So what happens is says because all interested party assume that account have been prepared according to the current regulation. So this is the main purpose for that. We cannot follow the old regulation. For example, if I qualified 5 years before, so all the information we have on my head, that is from the 5 years back. So I don't have any current legislation. For that reason, I have to keep myself up to date. So any information that is relevant to this year, I can prepare the accounts based on that information, not 5 years back. All right, let's move to the next one. Task 5. And task 5 and 6 both will be from the partnership. Remember that. And you're expecting 2 questions from the partnership, and you have to prepare the capital account, current account, appropriation account, and the partnership financial statements. You have to be very careful, and you have to be good on all of this. Okay, let's have a look. This task is about accounting for the partnership. You have the following information about the partnership. Riva, Sam, and Terry have been the owner of a partnership business for many years. At the end of the financial year, on 31st of March 2017, Sam retired from the partnership. Goodwill was valued at $48,000 on this date. So this is the thing. So there was a 3 partner and goodwill was valued. Goodwill will be always given in the question. Remember that you really don't have to worry about the goodwill. You don't have to calculate the goodwill. Goodwill amount will be given in the exam. All you have to remember how to record the goodwill and how to eliminate the goodwill. Remember that when you record the goodwill, it will be the old profit ratio. When we eliminate the goodwill, it has to be the new profit ratio that we have discussed last class, last lesson. We said how to record the goodwill and how to eliminate the goodwill. Record the goodwill means we have to use the old ratio and capital will be increased, and eliminate the goodwill, you have to use the new ratio and the capital will go down. So let's have a look. What is the requirement? There will be no salary for either partner after Sam retirement. Goodwill to be introduced in the accounting record 31st of March 2017. With the partnership change, then immediately eliminate. So you have to do both. You have to record the goodwill and you have to eliminate the goodwill. When you record the goodwill, goodwill is a debit. When we eliminate the goodwill, goodwill is a credit. So that's very important to understand that. So let's have a look. So we have a goodwill balance 48,000. The first requirement we have here, update the Terry's capital account. So how we do that? We have already opening balance 20,000. So Terry is already expecting 20,000 as a capital from the partnership business. But because of this capital, some of the capital for the Terry will be increased because of the goodwill. So let's do the journal first. So for the Terry, so you're going to say goodwill is a debit because we need to increase the amount for the goodwill. So we'll say the goodwill will be, let's have a look, how much is the old ratio we have? The old ratio we have here, profit ratio, we have Riva 50%, Sam 35%, and Terry 15%. So looking at Terry now, so looking at 15%. So 48,000 times 15%, that's the old ratio. So 48,000 times 15%, that gives me 7,200. 7,200. Okay, and that will be recording the goodwill. That time, goodwill will be debit and the capital credit. So the capital will go up by 7,200. On the other hand, when you're going to eliminate the goodwill, that time the capital will be debit with the new ratio. So 48,000 with the new ratio. What is the new ratio after retire? The new ratio is 30% Terry. So 30% of Terry. 48,000 times 30%, that gives me 14,400 as a new ratio. We want to eliminate the goodwill. This time our capital will be debit, capital debit, and goodwill credit. So capital will be go down by 14,400. This journal you have to record on the Terry's capital account. So let's do that. So we'll say the first journal is the goodwill debit and capital credit. So on the credit side is a capital account. Remember that. On the credit side, we're going to write goodwill, and that will be 7,200. And the next one, we have capital is a credit, capital is a debit. So on the debit side, we're going to write goodwill. That is 14,400. And you have to calculate the balance sheet. So added this to 20,000 plus 7,200. That will be 27,200. 27,200. We minus the 14,400 to find the balance sheet. That is 12,800. That's it. That's how we have to do the capital account for Terry. But very careful with the journal. You need to make sure you memorize the journal for the goodwill recording and also how to eliminate the goodwill. All right, let's move to the next one. The next one we have here. It says complete the following by selecting one of the option in both case. Goodwill will increase, decrease, make no difference. The value same capital on the retirement. If someone is retired, the capital goodwill will increase the capital. Remember that. Goodwill will always increase the capital, because if someone try to join to the partnership business or someone try to retire from the partnership business, they will take some extra money from the partnership. So they will not only take the money that they invested, they will say how much we make the goodwill during the business time, I have to take a part of that. So that would increase his capital. This is because he need to be charged the goodwill established by River Terry. No. He is entitled to share the partnership future profit. No. His effort building the business while he was partner must be recognized. Of course, this is the one. So before he retired, he will say, listen, I was working as a partner with you last 5 years or 10 years. So the company has some now value. So how much money I have invested, I'm not going to take only that. I will take part of the current value because of the goodwill. All right, let's move to the next one. Next one we have here, another partnership business has partners Asma and Ben. You have the following information for the year ended 31st of March 2017. Okay, what is the question here? So salary, drawings, interest on drawings, profit share for Asma and Ben. After appropriation, the residual profit. Remember, this word has to be very, very careful. It says after other appropriation. So that means all this thing is already done on the appropriation account. The residual profit, that residual profit means the profit left only for the distribution to the partner. Residual profit means you don't have to do anything else. You don't have to minus the salary. You don't have to do anything else. Residual profit means this is the profit left. This is the profit left to distribute to the partner. 72,000. Okay. So calculate the profit share for Asma and Ben. So from 72,000, Asma 60%, Ben 40%. So let's do that. 72,000 times 60% for Asma. That is 43,200. And rest is for the Ben. That is 28,800. All right, so that's it. Now move to the current account. Current account is quite simple. Remember that current account, if the partner is expecting any money from the business, we record on the credit side. So partners expecting any money from the business, for example, salary, interest on capital, for example, the profit share, everything will be interest on capital, everything will be on the credit. And so partner, what's a business owe to partner, or if the partner need to give anything to the business, so we say partners owe to business. So if the partners needs to give anything to the business, they have to record on the debit side. So let's have a look. The opening balance already given. Then we need to take the salary. So we have salary only for Asma. So salary, Asma will receive some salary, that is 12,000. When you do the salary, careful with the month and year. If the partners join in the middle of the year, so you have to give only the half of the year salary. 12,000 is a salary for Asma. Then share of profit that we have already calculated, 43,200 for Asma and 28,800 for Ben. Then the drawings go other side. Drawings means how much they already take from the business. So drawings 46,400 for Asma, 30,000 is for Ben. And interest on drawings. Interest on drawings 288 and 190, because they have to pay the interest on drawings as well. So only the drawings and the interest on drawings will come on the debit side on the current account, and rest of anything will go to the credit side on the current account. So you have to add it all this thing, the debit side. So 4,800, 46,000, 288. We added everything, and the total will be 55,200. And here it will be 30,000 plus 190, so 30,190. And on the other side, we have Asma, and the balance we need to minus this 2 from the Asma. We need to find the balance CD. How much is the balance CD? And for the Asma and Ben, you have to look separate because they might have a higher balance for the both. Very careful with that. So we can see here 28,000 plus 300. So for the Ben, is the credit side is shortest. So balance CD will be here 1060. And for Asma, we can see our credit side is higher. So 43,200 plus 12,000 is 55,200. So shortest is the debit side. So balance CD is 3712. So balance CD is basically the shortage. So whatever is the balance CD is the closing balance, and the balance CD will be balance BT for the next period. So here what we understand. So for the Asma, so credit side is higher, that is 52,200, and debit side is lower. So 3712, this one Asma will get from the partnership business. But on the other hand, for the Ben, you can see the debit side is higher. So that means Ben already took 30,190, and he will get this amount only from the business. So he need to pay this amount 1,060 back to the partnership business because he took more than he have on the current account. So you need to pay it back to the partnership business. So all you have to remember, the current account template, the drawings and the interest and drawings will be on the debit, and all the other things, salaries, interest on capital, then profit share, everything will be on the credit side. All right, any question from this one? From anyone? All right, let's move to the next one then. The next one we have task 6. This is our last question. So let's have a look. This one, normally it will come for the statement of financial position, but it is possible they can give you the profit and loss account as well. Let's read this question. It said this task is about final and preparation for the partnerships and the introduction to the reporting statement of financial position for the Onyx partnership. The partners are John and Pat. You have the final trial balance below. All the necessary year-end adjustment and profit to the current account. The partnership profit and loss sharing ratio 3:1. John take the higher share, so John will be 3, and the Pat is 1. The next requirement here is calculate the balance of each partner current account. Okay, so calculate the balance for each partner current account. Now remember the current account balance. Before you do that, we need to see how much is the current account balance we have on the trial balance. And after that, we'll share the profit. So let's have a look. How much is the balance we have for the John and Pat. Current account balance for John and Pat. So John, we have a credit balance 1774. So let's write it down. This workings, you have to remember how to do it. So we have John, Pat. So current account, trial balance. So we have here for the John, we have 1774 credit. So John 1774 is a credit. And for the Pat, we have 708, but it's a debit. 708, but it's a debit. 708 plus debit. Always careful with this debit and credit because the answer will be different if you don't understand that. Now I have to know the share of profit. Share of profit. 3:1. So the profit is 33,140. So let's do that. 33,140. So John will get higher. So divide by 4 times by 3. So John will get 24,855 credit. Profit is always credit, remember that. And the Pat will get only one portion. So 33,140 divided by 4. So 33,140 divided by 4. That is 8285. This is also credit. I have to find the balance. So this two are credit, so it will be added. So this two will be credit added. So 1774 plus 24,855, and that will give you 26,629, and that's a credit. But the other one is a little bit tricky because the first one is a debit, next one is credit. But the credit is higher, so the balance will be credit anyway. So let's do that. 8285 minus 708, because debit and credit is like a plus and minus. So 7577. That's my current account balance. Very careful with these workings because they might come in the exam and you have to know how to do it. So we have a John balance that is 26,629 to 6629, and it's a credit. And for the Pat is 7577. It is also credit. All right, let's have a look. What is the next question? The next question we have here, it says, where appropriate, Onyx has a policy to combine the bank and the cash account balance for the purpose of final account preparation. Calculate the bank and the cash figure that will appear in the statement of financial position. Okay, so bank and cash, how much are you going to show on the financial statement? So let's have a look. Where is the bank and cash? So you have a cash, 406 pound is a debit. Bank, 5544 is a debit. Both are debit. Remember that if there's a credit, we have to minus it because credit means like liability. Cash cannot be credit anyway, but the bank can be credit because the bank can go to the overdraft. So 5544 plus 406. This will be our cash and bank on the financial statement. So that will be our 5950. All right, now let's prepare our statement of financial position. So statement of financial position, we do our start with the non-current assets. So let's try that. Have a look how many non-current assets we have. Let's have a look. We have a machinery, that's the non-current asset. So let's take this one, machinery. There's only one box for the non-current assets, look like only one non-current asset. So let's take the cost, 44,540. And you have to minus the depreciation. So minus accumulated depreciation, that is 17,816. And the carrying value. So cost minus the depreciation will give us the carrying value. It's 26,724. Then you have to know how much is the current asset we have. So current asset is start with the cash and bank that we have just calculated. So cash and bank, and that we said 5950. And then the next one we have closing inventory. Take the closing inventory. That is 20,040. Then we have the next one, we have prepayments. Prepayments also our current asset. That is 1,300. Let's have a look if we have any trade receivables. Sales ledger control, that's our trade receivables. Normally this 4 is our non-current asset. So trade receivables. That is 32,806. Okay, so that's on current asset is done. Now look for the current liability. Current liability, we have payroll liability, you can see here. First one. So payroll liability. And that is 835. And the next one we have a VAT. Remember that VAT is always liability. VAT is a credit. Credit means always liability. So let's have a look. Where is the VAT? Then 3421. Then what else we have? On the top we have accruals. We have to take the accruals. Accruals is always a current liability. 1260. And what else we have? Have the purchase ledger control. That is trade payable. Okay, the trade payable is 19,098. 19,098. Okay. Now I have to find the net current asset. So net current asset, basically the current asset minus the current liability. So current asset, that is 60,096 minus the current liability. So 696 minus 24,614. That is 35,482. At my net current asset. Now the net current asset, if I add it with the carrying value of the non-current asset, that will give us the net asset. So let's do that. 35,482 plus 26,724. That will give us the net asset. And that is 62206. That's my net asset. Now on the statement of financial position for our partnership is a little bit different for the sole trader on the finance by section. On the finance by section, on the sole trader business, what we do opening capital, we do plus profit, less drawing, so less losses, and find the closing capital. But for the partnership, we just take two accounts. We take the partnership capital account and partnership current account. These two accounts will be equal to the net asset. So let's say capital account and partners current account. That's two. Capital and current. The current account you already have done before on the top, if you remember. We have done our current account 26, and this is the current account balance. So let's do this one first. So the current account balance for the John 26629, and for the Pat 7577. So total is 34,006. Let's do the capital account now. How much is the capital account we have? So capital account we have a John 21,000 and Pat 7,000. So let's do that, 21,000 and Pat 7,000. And that will give us total 28,000. Now we have to add, so John 21 plus 26, that is 47,629. For the Pat, 7 plus 7, 577, so 14,577. That will give us the total 62206. That will be exactly with our net asset. So when you do the financial statement question, we will know we have done right or wrong, because once we completed our financial statement or balance sheet, the net asset will be exactly equal to the finance by section. If it doesn't match, you need to make sure you have to check you've done some mistake. It has to be matched. So if it is not matched, something is wrong. So you need to find it out if it doesn't match. All right, so any question from this one, from anyone? You're going to see this question in the exam definitely, so make sure you practice enough for the financial statement. Remember, if you see the trade payable and the other payable is the same thing, make sure you take both. Sometimes some questions, some students said like the trade payable and other payable. So shall I take only one or both? You always take both. So trade receivables, other receivables, you take both. And also one more thing that is come in the exam sometimes, this is called hire purchase. Remember that if it is a hire purchase, it's a current liability. Hire purchase. You might see this one on the exam, hire purchase, this is our current liability. All right, let's have a look. The next one. Next one we have here. Consider the following in relation to the limited company that has been trading for a number of years. It has always had a financial year 31st of December. Okay. Show whether the following statement regarding the financial reporting are true or false. Okay. The general public may view updated income expenditure total for the company at least once in a year. That's true, isn't it? So when you have a financial statement for a limited company, or especially for the public limited company, so they have to publish the financial statement in the newspaper. Even they don't publish in the newspaper, you can still log into your company house. You can type on the company house. You can, for example, you want to say that, see like what is the financial statement for Tesco, you can say in a minute. So you can see anytime if you like. So you go to the company house, type like Tesco PLC, and the financial statement is there. And also, if you are a limited company, especially public limited company, by law, you have to publish the financial statement on the local newspaper. So you have to do that. So people have a chance to see it once in a year. That's true. That's the selection of the report heading for the cost of sales and other expenses. That's not true. So that's false. Cost of sales always have to say opening inventory plus purchase. Just make our own format. So there's a restriction. You have to follow that. This is called under the IS1, presentation of the financial statement. So remember that IAS1, presentation of the financial statement. Presentation of financial statement. So you cannot just prepare the way you want. So it has to be follow a pre-described format. Then the next one we have notes to the financial statement of the company may be provided to the relevant authorities separately from the statement themselves. That's not true. notes to the financial statement has to be part of the financial statement. When I say we have a financial statement, the financial statement have 5 parts, even though we only do profit and loss and the balance sheet, but there is another 3 parts. So we can say the first one is profit and loss. The next one is changes in equity, called it SOC, statement of changes in equity, SOC. Then we do cash flow statement, cash flow. Then we do SOFP, statement of financial position. And the last one is notes to the accounts. So that means 1, 2, 3, 4, and 5. So number 1, 2, 3, 4, 5. So 5 part of the financial statement. In the exam, if they ask you how many part of the financial statement, you have to say 5. And there is another IS is very common in the exam, that is called IS 16. Property, plant, and equipment. The question will ask you, property, plant, and equipment determine the value or prescribe the value under which IS. So they will say, they will give you different IS. So you have to choose IS 16. So IS 16 represent the property, plant, and the equipment, property, plant, equipment. We call it PPE. PPE, property, plant, and equipment under IS 16. And IS 1, presentation of the financial statement, and IAS 2, inventory valuation. Inventory valuation. So you have to know these things, 3 IS. It will give you a very quick mark in the exam. Definitely the question you will see in the exam from the IS, they'll ask you what IS is this, is this. You have to just take this, the one, this, the one. So if you know that one, you'll get the full marks. If you don't know, you'll get like 0. So you need to make sure you read that. Right, I think like this is the end of the questions. We have practiced all the 6 questions from the practice assessment 2. The practice assessment 1 I already gave last week to you the link, and also you can see on your EMS portal is there. And we have done one more practice today. Obviously, like it will help you to practice more. We have 2 practice assessment on the AAT portal. So we have now both. So you can practice all of this to make yourself ready for the exam.